Good evening, Trade Spooners, and let's take a look at today's pick for 2018. We're going to take a look at a long position in Silver Wheaton Corp. SLW is the ticker symbol. Let's scroll down and start taking a look at the information. We have the risk-reward rating for SLV at a 4, which is right around that mid-range, and the value momentum is right around 8, which is on the upper end of the range. If we scroll down and take a look at the price action, we got SLW trading at 22.08 on the close today, which was the 29th. And we're taking a look at the 52-week high at 37.46, so we're off of that. And we're looking at the 52-week low at 17.75, so we're above that. We've actually seen an implied volatility change. It's right around 33%. We have it listed here as 50%. There has been a recent spike, so it's about a 50% increase off of the 52-week lows. So we want to keep an eye on that. That just gives us a sense that there's a heightened expectation of potential movement comparative to the lows. The return on capital is 150% for the option positions, and if you look at the probability of success, it's right around 55%. The estimated move is being calculated into February at $1.25, and the options we're going to look at tonight are expiring on the 22nd of February. Taking a look at the stock trade, we're looking to put a buy order in on SLW at a limit price of $22.08 or better. Again, you can place that trade either pre-market or you can wait until the market opens to see how it goes and see where we're at compared to this entry price. Our target gain is going to be set after we're filled at $3.40 higher, so we're going to look at $25.48. We're going to put a sell limit to close good till cancel at that level. Our risk is going to be $3.40 below our entry price, so that's where we would put our stop, and that will come in right around, roughly around, let's see, about $19.32. So you can put it somewhere around that range where you have a comfort level. And again, as far as sizing goes, we suggest that you put only about 3 to 5% of either the percent cash available or percent buying power reduction. And again, that's our suggestion. The option strategy is to buy the February $22 calls, and we're looking to pay 82 cents or better, which is $82 per contract. Our target gain is 82 cents higher, so we're looking to get out with a sell limit of around 164, and that's going to be put out there good till cancel. Our max risk is going to be the total risk of buying these options at 82 cents. Or $82 per contract. And again, as far as sizing is concerned, we suggest that you look at putting in about 2.5 to maybe tops 10% in any one position. Do be very careful with your sizing. That is an important part of this exercise. The option spread trade is a full call spread, and where we're going to be buying the $22 calls, and we'll pay 82 cents. But to offset that, we'll sell the $23 calls, which is above the strike price that we're buying, for 40 cents. That reduces our cost basis by that amount, so our net risk is going to be 42 cents, and that's going to be the risk that we're going to carry through the trade until February expiration, 42 cents. Now our max profit, well, we want to take profits when the spread is trading at or around $1. So you could look at it and put a sell limit in at $1, or you could put a sell limit in at 95 cents, which will get you out roughly around that area. But again, you can use your prerogative. And as always, if these are new transactions and you've never placed these before, take an advantage of using our proprietary TradeSpoon virtual trade and click here and place that trade. Now, as I had mentioned, volatility has been on the move. And if you actually take a look at the volatility chart that we're looking at here, provided by Trading Block and Money Block, you will see an anomaly here where vol had dropped one day. That is a misprint. The lows right now are probably right around that 27 range on implied volatility. That's that green line. And the blue line is the historic volatility. And if I click here, I can also see the stock price. And you clearly see that the implied volatility has been on the move recently. It's right around that 37 level. So we want to keep an eye on that. Now going back to the TradeSpoon analysis, we're going to take a look at that price chart. And as you can see, as of late, you see that the price of the stock has been going up. We've seen it from basically December to current date, January 29th. Now, the reason or rationale of why implied volatility would be moving could be some sort of fundamental event. And the one big fundamental event that we always want to look for is earnings. And right now we don't have an earnings date listed within this expiration cycle of February. So we're going to keep that on our radar screen. But we see that price targets have been raised. We see that the dividend yield is on a higher end of 1.63%. And you see that production's increased, which will improve the ounce silver prices stabilization. So you see all of this key stock events right here listed for you as you go through and you're ascertaining each idea. As always, we will have our news and commentary that will bubble up to make sure that you have all the pertinent information. And if you ever have any questions, considerations, you can always email us at info@tradespoon.com. And always keep track of our recent daily picks as well as the performance. Well, that is our pick for January 30th, 2014. We're looking to go long Silver Wheaton SLW. Thank you, and we look forward to seeing you tomorrow for our next pick.